Welcome to Trading IQ, where we will learn the unlimited nature of the stock market. In my last video, I have shared how you can start your stock market journey, why should you take the risk, and how and where to start. So in case you haven't watched that video, I would request you to watch that video first and then come back here, since this is going to be a little advanced. You will find the link in the description as well as in the I button. In today's video, I'm going to introduce you to the most beautiful thing in the stock market, which is a technical chart. Now, this tool will help us identify potentially big opportunities. When I say big opportunities, I mean opportunities which are 10x, 20x, or unlimited. Yes, you heard it right, unlimited. So this is the nature of the stock market I'm going to teach you on my channel, which is the unlimited nature of the stock market. Now, what is technical analysis? It is a methodology for forecasting the direction of the price based on the past market data. Did not get it? Don't worry, I'm going to explain a little later. So before we understand the advanced strategy, let's first understand why this is so valued in the stock market. But before we do that, let's discuss some real life scenarios. So in my videos, I'm going to simplify each thing as they come, because I believe that every one of you is a trader and investor in your subconscious mind. It is just that you do not know how to use that skill to earn money. So my goal is to bring them from your subconscious mind to your conscious mind. So let's assume you decided to buy an AC. Since this is summertime, you're looking to buy an AC. But once you decided, did you buy the AC immediately? No, right? You have to check a lot of past data. Data means reviews, right? You do check reviews from other customers, how it behaved for them, how it worked for them, whether it is a good product or bad product. You'd ask your friend, you'd ask your family members. So you would get all of their opinions before you go ahead and buy that AC. I did that, and I believe everyone does that, right? So what are you doing here? You are reviewing the past data, right? Someone who already used that product, who has already experience in using that product and knows better how that product works and all, right? So this is past data for that product that you are looking to buy. Ever happened that you bought something from the same company which your friend is currently using? Simple, right? Similarly, the technical chart serves the same purpose on a much bigger scale. I cannot emphasize more on the word much because it really does. How? Let's dive into my screen. The best tool available in the market currently to study chart is TradingView. And you can simply access TradingView by using your Google account, Facebook account, or Instagram account. Now, once you sign into TradingView, you will see a similar interface like this you see on my screen. Okay, and you can search any stocks, any companies here on the search bar. And on the right hand side, you see a place called watch list, and you can add stocks to your watch list by searching them here. Okay. Now, for the purpose of today's video, let's search the big brother in the market, Reliance, which I already have in my watch list. So let's simply open it. Or you can just, simply type it down, Reliance, and Reliance Industry is the top one, and you would open that one, right? Now, once I open this chart, I see, let's go to a minute because I have made some drawings on the daily time frame chart. So this is a chart. This is a minute chart, right? So you see the shape of Reliance price action like this. You see it has formed a shape, right? It has formed a shape. Every time frame has its own shape because prices keeps moving. You see it is live market right now. Market is open. I'm recording this on June 22nd.
and the market is currently live, and you see it is forming a green candle right at this minute. So let's understand. So all you can see on this chart is a shape. Of course, it has formed a shape, but you see some green and red candles, right? So what are these green and red candles? Let's first understand that, and then you'll be able to understand the chart better. But before that, I want to kind of give you an example which would resonate similar to the concept of a candlestick. So let's understand this concept. During the time of COVID-19 last year, I experienced it personally. The prices of onion skyrocketed, right? And whenever you went to buy onion each week, you would hear the prices were real volatile. Now, each week it opened with a specific price, and due to huge demand and supply, it made a new high price within that week and a low price within that week, and it closed at a specific price at the end of the week. So if you haven't experienced this, I believe it is a similar concept, not exactly the same because the prices of these commodities are not as volatile as in the stock market, but the concept is same. So let's understand what is a candlestick and how does it work and how does it look and what are the meanings of each of the candlesticks. So let's move to daily time frame. So you can change the time frame simply by clicking here. To access time frame of seconds, you need to have a premium account, and these are you don't need to even bother about looking charts on a second basis or a 30-second basis. So the longer time frame you would choose, the more accuracy you would get in the market. So let's go to daily time frame where I've made some drawing for you to understand. So this is a candle, right? This is a candle which I explicitly marked here. So this is a daily candle, and this is a similar to the chart that we used to study in our academics. Like it has x-axis and y-axis. Y-axis represents the prices, and the x-axis represents the time, right? So you see 1 day, 5 day, 1 minute on you follow my mouse cursor, you see the duration. It can show you 1 month time, 1 day chart, 6 months chart, year to date, everything, right? So let's kind of reset it and make it daily and zoom it out for you to see clearly. So this candle formed on, you see the date here on the bottom of the screen, March 3rd. Now it opened at a specific price. So this is, let me just, so this is the opening price. It opened at this price. It made a high at this point. It made a low at this point, and it closed here, right? Now, if you hover your mouse around, you do not need to look for it anywhere. You just simply put in your mouse cursor on this particular candlestick, and you would see the statistics, the price opening, high, low, close here on this section. So let me put my mouse cursor here. And as you can see, Reliance opened on March 3rd at 2,121 rupees. It made a high of 2,219 rupees. It made a low of 2,107 rupees, and it closed at 2,202 rupees, right? That's it. Now, why is the color of this candle is green? So green represent bullish, red represent bearish. So on this particular day, on March 3rd, it formed a bullish candle, which is a green candle, and I've already mentioned that how you can look at the prices like days high, days low, opening price, and closing price. Now let's look at a green candle. Okay, so this is a green candle. Now the concept is same, but formation is a little different and a little opposite, I would say, than the green candle. So for a red candle, the opening price is this. It made a high at this point, it made a low at this point, and it closed here. So green candle, since I mentioned green candle represents a bearish outcome, so that means price went down from this point to this point, and while it did that, it made a high at this point, it made a low at this point. That's it. This is candlestick. Now the shape of candlesticks are random, because when I say it on my previous video that stock market is a place of emotions. So what happened during the this day on May 4th? It was volatile. So people were buying, people were selling. So every time, whenever someone wants to buy something, there has to be a seller in the market for the trades to actually happen. And on this day, it formed a red candle because there were more sellers than the buyers. Simple concept. I'll explain this later. So I believe you understood what are the candlesticks. That's it. And there are other technical analysts who just purely execute their trades based on the form or the shape of a candlestick. There are different shape of candlesticks. There are a lot of other books that you can read on candlesticks. That is a totally a different um, trading setup altogether for them. But I don't bother about candlesticks, like the form of the candlesticks. I just know what this candlestick is, and the day opening, day high, day closing price at the as the or the day low. So that's it. This is candlesticks. I believe you understood the concept, and if you haven't, I would request you to please comment down below, so I can perhaps explain better on the comment section, or maybe I can create another video specifically on candlesticks. Now, the concept that I shared with the onion prices, so it took about a week for you to see the past data, like at what price it opened, what price it closed, what price, the high price and the low price, right? But in the stock market, it happens in every seconds. So let's look at another chart, Tata Steel, right? So let's look at this chart on a weekly time frame. See Tata Steel. So as I mentioned earlier on this video, that technical chart offers a huge data, right? Like the instances I was sharing, that we are every one of us looking at past data to buy something. And so in the stock market, this is the what you call the past data. You can see the prices of Tata Steel from 1994 to till date. So you see the huge data that you have in front of you for you to make a decision whether you would buy it or not. Of course, this is not a recommendation, nothing, right? I'll just focus on understanding the price action. Just focus on understanding what I'm teaching you one by one. So you understood candlesticks. So when all the weekly, so each candle represents, for the weekly time frame, each candle represents a week time frame, right? So this candle formed on the week of May 3rd. This candle formed on the week of April 24th. So combining all these weekly candles, it formed a shape. So this is random. This is random for each and every stocks that you would encounter or search or research. You would find all of their patterns, the patterns are different for all the stocks. So here, the most important thing in terms of technical analysis that you need to understand are support and resistance. So what is support? What is resistance? So here, let's find a tool. Let's make some drawings here. Okay. So you assume this chart not as the prices, but a ball, right? So the path of the ball, it formed a shape. So what happened? So this ball created a support range here. Simple, right? It took a support here, it took a support here, it took a support here, and then it bounced back. So what it created? It created a zone where the prices are supported by huge demand. Means that there are no sellers here on this range. All of them are looking to buy at this point. So where the prices are getting supported, we call it a zone, that is a support zone or the demand zone. Demand means what, right? You are looking to buy it at any cost. So this is the area where people were willing to buy it at this level, and they did, right? Now that's why the prices did not go below this level. So this created a support zone, and we are looking at a weekly. So this is a long-term support. So if anyhow, and I hope it does not, because there'll be mayhem if price went below this support level from 1,000 to 35. That means we have some big troubles in the whole world, because there's Tata Steel. So let's hope that won't happen, but anything can happen in the market. So this is a support zone that created back in when? Back in 2001 and 2002. And it never reaches that level. But in its journey, it created a lot of support and a lot of resistance zone. Okay. So the next support zone, let's focus on the support zone first. So the next support zone it created here, because it took support here, here. You would also say it created a support here. But we would need at least 2 to 3 touch points when we are drawing a level, in this case support. There should be minimum of 2 or maximum of any number of touches would increase its significance. So this line, the price touches this one time, twice, thrice, fourth time, right? And then it bounced back, and it never saw that level, because it touched more time. Now on this created this is another support level that it created, right? And it touched one time, and it barely touched another time, so twice. So this is another support level. So that's how you need to create and draw different support levels and understand what is support and what is resistance. So just focus on drawing. Do not look at the price. Let's forget about the price. Okay. You just when you open a chart, look at it as a mathematical problem, right? Look at it that way. Now, let's understand what is resistance. It is the exact opposite to what the support level that I shared with you, right? So let's look at it and try to figure it out and make some drawing. Okay. So when it started, when this company, when Tata Steel joined the stock market back in 1994, it started at 172 rupees. You can also see the prices here when I'm hovering the mouse here. It started at 171 rupees, and then it went down, and then it created a resistance level. Now, why this called a resistance? Because it is resisting the price to move above that level. That means what? People are not willing to buy at this level. As similar to, let's draw the support level simultaneously. So this is support and this is resistance. Simple, because prices are not going below that level, or the prices are not going above that level. So this is called resistance and this is called support. Right? Similar concept. Support is where there is huge demand, and resistance is where there is huge supply. People are willing to sell it at any cost at this level, and people are willing to buy at any cost at this level. Right? This is very simple. You do not need to complicate things. As I've already mentioned, look at this chart as a mathematical problem. And also, you can do one thing. But you understood the candlesticks, but if you want to draw the line better, you can change the structure of this chart into a line structure. Now, if you have trouble drawing support and resistance on the candles chart, you can simply choose the line chart and create your support and resistance, right? It would be easier. So you can see the points. This is support, right? This is resistance. This is resistance. So this is how you would find support and resistance. Now, next up is volume. And believe me, guys, nothing can be more important than this indicator volume. And all your buying decision will be based on this volume indicator. So let's bring volume up on my screen. So how you can do that? Simply click on indicator, search for volume. That's it. So you see these are similar to these candlesticks, but it is not actually a candle. We do not call this as a candle, right? So it just represents volume, unlike these candles, which represent the prices like day high, day low, closing price, and opening price. So how would you read, how would you study volume on this chart? So you see when you see this indicator volume, it came up when I added this on this chart. So you would look for volume here. Now for that, similar to when you wanted to see the price action, you would just hover around. You would see the price action in this section. So you would find the volume here. So let's put our mouse cursor on one of this green candle. Let's suppose this candle. So subsequently, look at the candle that formed on that week, because we are looking at a weekly time frame, right? So on this week, price the price of Tata Steel opened at 1,031 rupees. It created a high of 1,192 rupees. It made a low of 1,018 rupees and closed at 1,182 rupees. And within that week, the transaction happened, right? Buyer met seller, seller met buyer, transaction happened, and price went up from 1,031 rupees to 1,182 rupees. And for all the transaction, those included represents volume. So for that week, you see the volume is 170. You can see the volume here, 171 million for that week. For the previous week, similarly, you can see 139, the week before 92, right? So that's how you can study volume. Now, next up, moving average. And believe me, this is one of whatever indicators that I'll be sharing, and it will be very minimal. I won't use many indicators. There are so many indicators, and you can get lost in all those indicators. So, what I'll be teaching, just focus on those indicators. And I have a strategy for you that I'll share with you, combining all the indicators that I'll be teaching on this video or maybe on the next video. Okay. So, please focus and please be patient, right? And do not think in terms of profit and loss right now. You think of understanding the concept first, the technical analysis. So what is moving average? So let's simplify this first with some real time scenarios, right? So in cricket, how would you judge a batsman or a bowler? You would see their average score, right? For a batsman. So if Virat Kohli has a batting average of 50 plus, is that meaning that he will score 50 plus on each innings, right? No one can tell that, right? But you get a fair idea of his performance, and you would expect some sort of run, like 50 plus run on each innings when he comes to bat. Now, in the stock market, moving average does the same thing, right? The concept is same. So do not think that it is exactly the same. The concept is same. So you understand better. So how can you draw moving average? So for that, you see indicator here. You would click on that. You would so as I was mentioning that there are so many indicators and you can get lost, right? So don't worry about them. Just focus on the indicators that I'm teaching you, and your life will be simple and profitable. So let's search for moving average. You see the moving average? Just click on that. Now let's make some changes. So you see settings here. So we want a moving average, which is 30 weeks moving average. Let me just change the styles, and I like black, a little thicker. Okay. So now we have moving average on the screen. So what is this moving average? This is the 30-week moving average. So 30-week moving average is you have to consider this as a Lakshman Rekha, right? So you have to adhere this moving average religiously. You have to follow this moving average religiously. Okay. Now I'll tell you about its feature later, but let's first understand what is moving average. So this 30-week moving average, so it created a line, right? It created a moving line. So how did it happen? There are a lot of calculations going behind the scene, and you do not need to bother about those calculations. So it basically is the 30-week moving average is the average prices of the past 29 weeks. And this is very significant because it tells us just by looking at it whether this is a buy or not. So this is as important as when you're making a decision whether you would buy a stock or you would not buy a stock. So remember, buying a stock is a decision. Of course, everyone would take that, but not to buy a stock is also a very important decision. So moving average would tell us that this stock is a buy or this stock is not, right? This is as simple as that. So moving average is the average prices of for the 30-week moving average, it is the average prices of the past 29 weeks. And it is a lagging indicator. Lagging indicator means that it runs slow, but you get a fair idea of its current average, like where it is right now. So if the prices are above this moving average, this 30-week moving average on a weekly candle, on a weekly time frame, you can consider buying. Not this stock, because we haven't come to a conclusion whether we can buy just looking at a moving average. No, you cannot simply buy based on one single indicator. Okay, so do not think about buying profit loss, whether you should do something. You do not need to do something. That is the most important thing that you can do for yourself, is to learn first and then act. Do not act before learning. Next up, relative strength. And you could similarly find this by searching relative. You see relative strength, right? This is the relative strength, and find it in the bottom of the chart. Now I would make some changes, and let's first understand what is relative strength. So relative strength is a tool that will help us compare this given stock with the actual market. Now, what I mean by market, so of course, on my next video, I'm going to share different indexes that are available in the stock market, and what are the indexes, and what we call a market. So we call stock market, right? So for a market, we have indices, like combining all the 50 largest companies. It formed an index, which we called Nifty 50, and then Sensex. So these are the market indexes. Okay, this tool will help us compare the given stock with the actual market, and actual market, we call it Nifty 50. Let's just understand the market is Nifty 50. Okay, so on you come to the settings from just by hovering this area, you would find the gear icon, and in the inputs you would just change comparative symbol to this. SPX is S&P 500, which is in the US, and which is the US indexes, one of the US index. Nifty 50, the first one. Okay, so now I'm comparing this stock Tata Steel with Nifty 50. Okay, I'll change the style. I would like everyone to be black and a little thinner. thicker. Okay. Uh, One more thing. Okay. So this is the comparison between the prices of Nifty 50 and Tata Steel. So again, what you can see. So this level, the line that you see, the horizontal line you see, it is the market, and the price, the movement of this you see the line, the moving line. This is the comparison compared to what? Compared to market. So now compared to market, Tata Steel is currently performing better. So this is a performance tool, performance measurement tool, how it is performing when it is compared with the market. So relative strength would give you an indication that this given stock is performing better than the market. Now, in the stock market, when you want to buy something, would you want to buy something at a very lower price just because the prices are low? No, you want to buy something which is performing better than the actual market. That's when you will have the edge to go ahead of the market and get more profits. Do you understand? That's it, guys. We don't need to learn any more indicators. These are all. We will form a strategy combining all these indicators and stage analysis, which will give you potentially unlimited returns. So please, guys, I would request you to subscribe to my YouTube channel, click on the bell icon to get notified, and also like and comment down for any questions. Thank you, guys. Have a great day.